Welcome to another video on market structure. So now we got Bitcoin. We're using this for an example, and I want to make very clear that the concepts that I talk about in these market structure videos, the vast majority of these videos being with Forex, this is applicable to every market. So whether you're trading cryptocurrency, whether you're trading Forex, stocks, futures, this can all be used in all markets. It's the same exact signatures. Because I know I'm gonna have some people that are gonna say, why don't you use futures more? I'll trade futures. You can use it in futures. It's the same exact signatures. Price is price. It's the same exact signatures. Okay, you're just going to take what I teach here and you're going to bring it over into the futures market if that's what you trade. All right, so now we got Bitcoin here. This is a daily chart of Bitcoin. We can all see that this is currently, actually just had a shift, but it has been operating within a bearish market structure for a while now. So down here, we're going to take our focus down into this area. So we were operating within a bearish market structure. We've already concluded that. You can see here on the 4-hour chart, same deal. It's just super bearish, consistently trending lower, operating within a bearish market structure. Now, what we're going to do is we're going to measure this price range because this is a setup. This is a setup that I posted in the Discord the other day. I know some people are scratching their heads like, well, this is bearish. Why were you looking for a buy on it? Well, I was looking for a buy on it because of the lessons that I taught you in the previous lesson. The same exact thing. What I did was I utilized multiple time frames. I'm fully aware that this thing is bearish. I'm fully aware of that. But I'm utilizing multiple time frames. I'm utilizing premium and discount, and I'm trading within these individual price ranges, utilizing lower time frame market structure to capitalize on these retracements within these ranges. So what we're going to do is, again, let me repot that on there. How do we measure a premium? How do we find premium and discount? Again, all you do is you take your Fibonacci from the most recent dynamic price range. You take from the high to the low. We're going to measure that price range. What are we going to do? We're going to find 50% of that price range. And I'm going to plot that on this chart. See that? There's 50% of that price range. Anything below 50% equilibrium of that price range is what? It's in a discount. Anything above it is in a what? It's in a premium. Okay, so that's the 4-hour price range. Clearly bearish market structure on the 4-hour. Now this is what I'm talking about, because we've already concluded that the higher time frame chart, 4-hour chart, was bearish. But then you have a totally different story on your lower time frame, for example, because we can see Bitcoin in here. See how it was consistently trending up in here? This was operating within a bullish market structure in here while it was in a 4-hour discount. Let me say that again. And really listen to what I'm telling you. This Bitcoin in here was operating within a bullish market structure while in a 4-hour discount. That is very, very, very important information, because that is the power of understanding how to use multi-time frame market structure on different time frames, knowing how to utilize premium and discount marketplaces. And when you combine that together, when you combine market structure with premium and discount, you have a very, very, very powerful combination at your disposal. So Bitcoin USD or Bitcoin in here, you can see we had our shifted market structure right here during New York session, or during New York kill zone. We had that shifted market structure. See that? And then we pull back within that range. We put in a swing low level, and then we attack the highs. So at this point, we're operating within a bullish market structure. What does price do? It pulls back within that price range, finds support, and then it continues its ascent higher. See that? Trades up into a 4-hour premium. So you can capitalize on that just by having a firm understanding of lower time frame market structure. You have your equilibrium price point noted, and you're fully aware of where these market structure shifts occur when something is fully operating within a bullish or bearish market structure, depending on whether you're buying or whether you're shorting. You can capitalize on those higher prices just by utilizing the tips that I've given you thus far. Then remember, after it trades up into a premium, you really wouldn't want to touch it at that point, because you got to remember, higher time frame market structure is bearish. So it's really only a good play until, or it's only a good buy while it's below 50% equilibrium. So while it's in a discount marketplace, the second it trades above 50% equilibrium, the high probability trade goes away. It's no longer cheap. It's no longer a good trade. Again, another example of how you can utilize your higher time frame premium and discount. So because technically this is a counter trend trade. So that's essentially what I'm showing you how to do with this. I don't really like counter trend trading. The easiest money is with trading with the overall trend and having that multi multi-time frame alignment that we went over in the previous episode. That's what I like. I like to have multi-time frame alignment because that's just the easiest money. But this is another way that you can do it. But you got to be a little bit more nimble. You got to be a little bit more precise. But by having a firm grasp of market structure, by having a firm grasp of premium and discount, you can make it happen. So this is how you make it happen.